Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
What's going on? How you doing?
No, thanks for having me.
Thanks for having me. I'm sorry. I gotta.
I mean, it's an exciting time, right? Today is, according to the president, Liberation Day. And I suppose what he means is liberating the United States from unfair, imbalanced trade tariff policies. What it means is, and we're recording on Wednesday, what is it, April 2nd?
Yeah.
At around noon. And I guess at the end of, after the markets close, he will announce reciprocal tariffs on a bunch of countries that themselves tariff us. That's been sort of driving, frenetic movement around what he will do and won't do and blah, 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 has sort of been the market dynamic we've been in for weeks now. What does it feel like on today to you in this regard?
I mean, today you're seeing a little bit of a relief rally going into the announcements. Not sure if it's warranted. I think the level of uncertainty after today is still going to remain high. Partially because we don't know what the retaliations are going to look like, and we don't know what the responses to the retaliations are going to look like. And so I'm in the camp that, folks will leave today's events with more questions than answers. And there's still a debate as to how they're going to implement it and, how do you measure the non-tariff trade barriers. And so... I think you get a little bit of a relief rally because, the uncertainty about today's events will go away. However, I think that, rebound and risk will probably be short-lived because the market will start focusing on the responses as well as, kind of the deteriorating sentiment about the U.S. economy.
Right.
And so this just kind of seems like a chapter that is going to close, and that should give folks a little relief. But ultimately, the next, 3 to 6 months, 6 months to a year, I'm still very cautious on. And it's partially a function of the tariffs, but also just a function of where we are in the business cycle. On Sunday night, Goldman produced their recession forecast for the year, and they upped their probability of recession from 25% to 35% which is a meaningful jump. There's a bunch of street side economists that are anywhere from 30 to 50%. We had a famous bond investor from Double Line, Jeffrey Gundlach, one of the more notable fixed income voices out there. He put his probability at 60%. Wow. And even the Fed during the last FOMC, they downgraded their forecast for growth. If you look at things like Atlanta GDP forecasts, this moved a lot lower for Q2, and there's just a string of headlines that continue to reinforce that the outlook 6 to 12 months from now is worse than people think. I'll give you one anecdote, which is, the New York Fed published a report about the impact that student loans are going to have on credit scores. Basically, there's going to be 9 million people in the U.S. that are going to have their credit scores, move down anywhere from 100 to 150 points because of the lack of repayment hitting their credit scores. This is just has to do with
is this folks who didn't pay because they were getting relief, or they thought they might, or they just hadn't been paying?
I believe the Biden administration had put a freeze on credit score stuff being posted.
I see.
If you didn't pay once the repayment window opened up again, and so think about that: 9 million people that probably haven't purchased a home yet, that are getting their credit score, negatively impacted, that has real consequences to the housing market.
And less borrowing power in general.
Less borrowing power, right?
Less buying power.
All of the above, right? You couple that with, the labor market dynamics where we still haven't seen the layoffs hit the data yet, but as far as we know, like there's been hundreds of thousands of job cuts that have been announced between the federal government and the private sector, and that hasn't hit the data yet, but it will.
Yeah.
And we know that, the private market hiring dynamics weren't even that strong over the past year. They only accounted for like 25% of the hiring or something.
Yeah, it's mostly like what federal, state, and local
federal,
government.
state, and local. And so if you're telling me the government's been laying off a ton of people, like I don't think the private market is necessarily going to absorb all of that labor. And so you've got a dynamic where prices are going to remain elevated because of tariffs. People are losing their jobs. CEOs and CFOs are feeling as uncertain as ever about, the business climate. And you have, just a general deterioration in consumer sentiment. And so you've seen that in the Michigan consumer sentiment data, the Conference Board, consumer sentiment data. People feel really bad. People feel bad about their job outlook, their wage outlook. People, feel bad about the market. And so that has an impact on spending. And then you throw in things like tourism, for example, right? One of the stats we've been highlighting here is, I think Canadian flights to the U.S. In terms of plane bookings for the summer are down 70% year over year. I'm guessing European travel to the U.S. is also going to be down, pretty meaningfully. And so that's going to be a hit on the economy. And so there's a robust set of factors that are going to weigh on the U.S. And I think it's really hard for investors to ignore that, particularly once you've gotten this kind of tariff news kind of removed from the market. People will be like, okay, that's
start focusing on other things. And you're saying there are a lot of other things that raise questions here.
Raise questions. Yeah. And I mean, you look no further than corporate America, right? Corporate America is very good at estimating and providing outlooks about, their earnings, right? And what consumers are doing. Like they're literally analyzing all the data you can possibly think of, foot traffic in stores, clicks on certain ads, like et cetera. Mm-hmm. And the message from corporate America has not been good, right? Walmart CEO, Lululemon sales, Nike, right? What do people spend money on when they feel good? Yoga pants and sneakers.
I know. What was that headline of something like the Lululemon guys said that there was a troubling trend, and the trend was people are buying secondhand Lululemon.
Secondhand clothing in general.
Secondhand clothing. Yeah. At increased levels.
And so
doesn't bode well for sales.
Correct. Yeah. Right. There's this, the sentiment shift leads to changes in behavior.
Yeah.
And, in classic economics, it's like substitute goods, right? And so like, if I can't get a Coke, like I'm going to go to Pepsi. Or if this thing is $2, I'm going to go to the thing that's $1. Mm-hmm. If I'm not shopping at Lululemon, maybe I'm shopping at Family Dollar.
Yeah.
Right? And so you're seeing these dynamics kind of happen. And I think that's really the core theme of 2025.
Interesting. Well, that's a lot to think about. And
Absolutely.
It's funny because so much has changed. You have to wonder what I was at an event in Washington on Monday, the Cherry Blossom Summit, and which is a private conference that Senator Bill Hagerty puts on. Mm-hmm. And Treasury Secretary Scott Bessent was there, and Senator Hagerty interviewed Bessent. And he started with this joke of like, so he comes up on stage and he's like, so how's everyone feeling about the market, right? And there's jokes.
So good.
There's this is a very private event, in that it's like there's no press or whatever, and it's and he said he was getting some text messages from his friends, like in the market, with stuff that was like ranging from like questions to, he's joking, I'm assuming, to dangerous stuff he might have to tell the Secret Service about. But then he basically doubled down on he said that markets were focused on micro moves and stuff. So again, like the president, also downplaying the market. And you just have to wonder at what level, take an SPX drawdown, at what level do they have to, how much leeway do they think they have? Like how many months of market stuff can they bear while they try to do this detox that they say the economy needs?
I mean, you have to give it a real go, right? And
Right.
a 10%, 12% correction in the S&P isn't really a real go
Right.
at fixing the structural problems. And so I think they've got a lot more capacity for pain.
Yeah.
Because the S&P was up 20+% last year.
Right.
So yeah, people are nervous about a 10-15% correction. Like, guys, come on. Like, the market's ripped.
Right.
People are
Take a little breather, guys.
Take a little breather. And the people that own the assets, I mean, those are the people sitting on 3% mortgages.
Yeah.
Those are the people that have been invested in the market for the past, since the great
Decades.
financial crisis, right? And so there is, and like, this is the wealthiest country on the planet by a mile. And so, like, they can stomach the pain. And one of the things I do worry about in terms of Bessent is he's very focused on, cutting the deficit by a measured amount every year, like call it $300 to $500 billion.
Right.
But there's rumors now that tax receipts are actually going to fall short by a couple $100 billion to begin with.
Yeah.
And so if you're telling me he wants to cut spending by $300 billion, maybe a bit more this year, and tax receipts are going to be $300 billion lower than like they had expected. Like, well, then you're talking about
Flat.
$600 billion worth of cutting you need to do to get the deficit to where you wanted it to be.
That's right. If you just do the amount, then you end up flat, basically.
So like, you really, like, you need to, like, continue to push the envelope if you're actually trying to accomplish your goals, and it's going to be more painful than people think.
Yeah. I think that's a key takeaway that the market has digested. It doesn't necessarily mean things go a lot lower, but it does make you wonder whether you should be buying risk assets right now. Yeah. Because they're not yet anywhere close, it seems, in their messaging to saying, that tariffs have worked.
Yeah.
Right? Or they still have a lot more to do.
Like, just think about the idea.
They've only been in office for 2.5 months.
Yeah, but just think about the idea of, like, a factory that needs to move from offshore to onshore to accommodate these tariffs. Like, it takes years to build a factory.
Yeah.
It literally takes like 3 years to build a factory. Now, in that time, like, you got to hire electricians, plumbers, construction workers, all building permits, all that stuff you got to do. But it's not the same as, like, I have 6,000 people working in jobs with 401ks and healthcare. And I'm supporting
that doesn't
the
come until
economy.
later if it comes.
Correct. Yeah. And so, we can talk about all these investments and stuff, but, like, the time from investment to, like, the final kind of
success story,
is a while.
Yeah.
And I think, like, they're doing the right thing. Like, they are trying to be reasonable about cutting spending. They are trying to make the U.S. more resilient and more self-sufficient. And to actually accomplish those goals, like, you need to, like, exert some pain onto the market.
Yeah, that's what we're seeing.
There's no way around it.
Well, all right, we'll keep watching. My friend Beimnet Abebe from Galaxy Trading, thank you so much.